Good evening. Hope this finds you doing well, and that your week is moving in the right direction. It is Thursday. I did have to think about that for a second. And my week is going well. We've had some really good wins. I had a client that was recently divorced, who had a pretty particular timeline in which she needed a house that has been in a handful of very heated multiple bids. Was finally successful this week, and in a way that we just used some really great creativity. Something we figured out kind of what the seller's needs were, and we catered an offer to that, so it wasn't necessarily just price driven. We kind of tapped into some other resources, which that felt good. She was in a tough position, and when it comes to multiple bids, obviously, as I tell people, it's nobody ever chooses or wants to be in a multiple bid. The good news is, if you're in a multiple bid now, you're probably looking at a property that's quite desirable, and it will be on the backside as well. But we have seen that certain of our markets have been very cutthroat and competitive, just because we don't have the inventory to sell to the people that do need to buy. So that felt really good to get her under contract. We're going to do that inspection this weekend. That felt a win. I had a listing close, which was a win as well. It was a building in Chicago that is an iconic building, but one that's been very difficult to sell in for the last few years, especially the upper end, the luxury market. We just sold the highest price listing and closed the highest price listing in the building in 2 years by almost 200%. That felt really good for those sellers to get them across the finish line, knowing that when we bit that one off, we knew it was going to be a bit of a challenge, just because the building had been a little bit sluggish. So two of our clients experienced some really good wins this week, and that always makes me feel good. What I wanted to dive in tonight, other than just celebrating a couple wins, I wanted to circle back on the mortgages a little bit. We are seeing some more disruptors that are worth acknowledging. I know last night I just breezed over it for a second, but over the weekend I discussed how Chase had put some stronger, more tight mortgage criteria in place, and we had a couple other banks follow suit as well. Not all of them, but we have seen some of the other banks have said they're raising their minimum credit scores. Some of them are raising their down payments. So we're just seeing some changes on that front. And I think realistically, if I really think about it, I'm glad the banks are doing that. That tells me that they're planning. They're putting together these plans. They're looking at what's happening, and they're saying, well, we want to be resilient. And I think they're saying to themselves, this is how we keep ourselves in the best place possible in a turbulent time. Just like as we talked about previously with unemployment, there are companies that have to take a look and say, how do we make ourselves the most resilient during a tough challenge, so that we can be here on the backside for our consumers, our employees, and everyone else. So I don't necessarily see them as bad things. I like that they're doing something, especially something with a plan. Now, it is also important to note that every one of these banks that's considering or putting into place these tighter criteria, they're also very vocal about the fact that these are temporary changes, obviously to see how everything weathers with COVID-19. In addition to saying that they're temporary, they're also saying that part of the reason is the fact that most of our mortgage lenders are getting, and financial institutions are getting walloped with refinances right now. We've seen more refinances this year than any other year in a given month in the last decade. So leading up to this, we had a tremendous amount of activity going on in their worlds, and then they took them all remote. So I know a lot of these banks are struggling just to do the jobs as they see fit. So I personally think that it's a little bit of a win-win for those banks. They kind of reduce some of their exposure, and they give themselves a chance to catch up with the workloads that they already have on them, in a manner that they can kind of sit and watch the market a little bit as things go. As I did say the other night, I thought when Chase, it was just Chase that was making these changes. I didn't think there was going to be too much impact on the markets. Obviously, now as we see some following suit, there's going to be impacts on the markets. First and foremost, we have to understand that it's going to limit some of the smaller down payment and lower credit score borrowers. There are still programs out there. There are still lenders that are doing stuff. As I said a few weeks ago when I was talking about the jumbo loans, my biggest concern in something like this is making sure that everyone's getting accurate information. For example, if somebody walks into Chase and says, "How I want to get a 10% down loan," and they're told that they can't, are they also then being told, "Well, you know, if you go over to guaranteed rate, I know that they still have plenty of products for you," or are they being told the industry is no longer doing 10% loans? I'd like to think the first, but I'm tending to believe it's probably the later. That's why I'm giving you guys this information. There still are plenty of lenders out there doing these things. But I do think that we're going to see a few less opportunities for certain people that could tighten up, especially a lot of our first-time buyers. That market could tighten up a little bit. I do think maybe we'll start to see some more familial gifts too. People that maybe don't necessarily want to have money tied up in the stock market right now. I've got a lot of clients that are getting fed up with that, and they're saying, "Hey, maybe we give a temporary gift or an IOU or something to a family member or something like that." So it does have the ability to have some impact on our market. Once again, as long as we have other options out there, I still think that it's not going to have a huge impact, but that's something that I'm going to monitor and watch. Anyways, that's what I've got for you tonight. On that note, be kind. Be kind to yourself. Be kind to one another. Take care of yourself. Take care of one another. Be responsible for your actions. That's the new thing that I'm going to add in now. Be responsible for your actions and be responsible for your own social distancing. I am excited to get through this with all of you. We are another day closer to whenever the end may be. And I think we're doing a great job. So I will look forward to seeing you the next time, which will be tomorrow. Have a great night.